Hey guys, welcome to the Forex Market Analysis session. My name is Alexander Nikitin, and in today's video I will analyze my whole portfolio of 19 pairs in search for unified Gartley pattern and a cipher advanced formation. Okay, as you guys know, my trading routine consists of three parts. They are identification or analysis step. We first need to find a pattern. We first need to find a trading opportunity. Then we have an execution step. After the pattern is complete, it doesn't mean that we automatically execute the trade. No, the pattern is not equal to trade. We first need to look at the potential reversal zone, which we need to look at our support or resistance zone that is drawn by the pattern, and only execute if we have some signals, executing using our entry strategies. And then after we execute our trade, there is a trade management step, which is basically cutting losses and letting the profits run. Okay, all the three steps should be back tested because all of them are using its own variables. And if you have an identification step which is objective and very good, if you have a trade execution step which is also objective and also very good, and your trade management is poor, it may ruin all your strategy, it may ruin all your approach. So you should test all the three in combination, and they all should complement each other. They should not contradict to each other. And well, I think you got my thoughts. Okay, the analysis part, the first part, the identification part is done absolutely objectively. It is robotic. All the patterns are found by MPS5 pattern recognition software. It is the software that I created myself to find these patterns. And basically it is absolutely simple stuff. What you need to do, you just go to your indicator settings and you just set your algorithms to your taste. It is no different from setting the oscillators. It is no different from setting the indicators that you have already predefined. Okay, in this case I'm running the algorithm that is called Prex algorithm. It is finding highest highs and lowest lows, and the period of that algorithm is 20. Okay, also I set my patterns, I set the color, I set the type of the stop loss, for example Fibonacci 113. It means that if we go to hit the 113, it will be our either a stop loss or invalidation level. I prefer to treat this as an invalidation level. Okay, you just do the monotonous operations to every pattern to set to your taste. Okay, and in the bottom of that you even have your own custom pattern. I am using a unified Gartley pattern. It is the pattern that I created, and here are the settings for that pattern: the minimum B, maximal B, the extension past A point. Sometimes we have patterns when the C point extends past A, like ciphers and sharks, so in this case it is false. Minimum C, maximal C, completion point, and the invalidation point. So you can see what is actually my pattern as presented in numbers, in mathematical numbers. Okay, very simple. And then you just click it OK, and the settings are saved, and you have your patterns displayed on your chart. And here in your graphic interface, of course you can switch some patterns on and off if you don't need them. Also, you can switch between the approaches. If you are not a fan of advanced formation but you are a fan of a harmonic patterns, you can enable some of them this way or this way. Okay, we don't have many of sharks, we don't have many of deep crabs, but we have crabs for sure. Okay, so just enable them, disable them to your preference. And you can switch between the algorithms to see the market from different perspective. If you're not a fan of using automatic pattern recognition, just click to this manual tab and do it manually. For example, press A on your keyboard, click this diagonal to draw this, If you dislike this diagonal drawing, then click to C to draw patterns this way, like this. Manual stuff is very interesting. It helps you to learn the patterns. But when you already know your patterns, you know how to identify them, you know the structure of the pattern. Basically, it is much better to use an automated stuff. And of course, you can switch your pattern recognition on, and every time you switch to other time frame, they will be recalculated according to the time frame, yes? Or you can switch them off, and when you switch to other time frame, you see the patterns for smaller time frame execution, for example, they stay exactly as they were drawn on that 1 hour time frame. Well, that's it. Brief characteristics of MPS5. You can find more about this pattern recognition software on my website. There are demonstration videos that will show you all the possibilities of that software. Let's continue. The first pair for today is the euro-dollar. Let me switch to my profile of trading profile of my pairs. I have grouped them into 3 groups. The first group is called 15-minute. It means that I can identify patterns on 15 minutes. There are euro-dollar, dollar-yen, pound-dollar, euro-yen, Aussie-dollar, pound-yen, dollar-Canadian, New Zealand yen. So these pairs can be traded on 15-minute, 30-minute, and 1 hour to my rules. Okay, we don't have anything here. Let's switch to 30-minute. We have this potential unified Gartley if we go deeper, but well, we have a higher probability of price to move higher rather than lower. And let us switch to 1 hour. We've already seen this pattern at 16.99. Then let us go to dollar-yen. Same operations. Switch to 30-minute, switch to 1 hour. We already completed this unified Gartley and it bounced to the upside, and well, the reaction is already done. The profits already taken. As for pound-dollar, 30-minute has nothing, 1 hour has nothing. Let us switch to euro-yen. Same, no patterns on this pair. Aussie dollar, 30 minutes, nothing. 1 hour, here's the trading opportunity. We traded yesterday and the day before. Yesterday we took some profits. So pound yen, nothing yet. Dollar Canadian, USD Canadian, nothing. Well, we traded these 15-minute patterns. We had some profits using this unified Gartley, and we had some profits buying this cipher advance formation as well. New Zealand dollar, 15-minute, 30-minute, and 1 hour. Okay, and let me say a few words about the difference between the pattern completion and the pattern execution. For example, I will use this New Zealand dollar 15-minute example. Let me disable this. So we found this pattern. Here it is. It is this opportunity. And we also look at momentum of this candle. The momentum of this candle is very high, and you can see that the body, this indicator simply calculates the body, the size of the body. And if the next body is greater, it is green. If it is smaller than previous body, then it is red. So we can see that after this high momentum candle, we have next candle smaller, next candle smaller. So we have momentum slowing down somewhere here. Yes, this is it, momentum slowing down. And finally, when we have this red candle, you can see momentum going up at this selling possibility. And what we do, we put our selling stop loss. And according to my rules, my stop loss goes 3 ATR from my entry, and the 3 ATR is 15.6. So if we draw our 15.6 rectangle for you to see, let me do it this way. We don't need to draw it. I will disable this. I will simply go here, click this cursor, go to this line, yes, press Z on my keyboard, and I will have the ATRs net drawn by MPS5 pattern recognition software. As you see, it draws 1 ATR above the level, 2 ATR above the level, and 3 ATR above the level. So my stop loss was this one. This is the stop loss, 3 ATR above the level. It is way beyond the pattern invalidation level. You can see if I execute it here, my stop loss is here, and I've shown this in my live trading chat room on TradingView. If you are not yet a member of that live trading chat room, you are welcome to send me a request and I will add you. It is absolutely free, at least for now. Okay, and also we have this ATRs to the downside. This ATR net is very important for trade management. My trade management rules are very simple. After we have that trade as trade triggered, yes, I then wait for price to start moving in my direction. If it goes straight against me, then I simply close my stop loss. But when it starts moving in my direction, when it goes 1 ATR in my direction, I cut my loss by 1 ATR, like this. If it moves 1 ATR more, I cut my loss more. You see that? And if it moves 1 ATR more, 3 ATRs, I move it to break even. Also, when my first ATR is hit, and I do my first cutting loss, I already have this price section enough for drawing trend lines, and I draw my trend line, and what is most important, I exit at the trend line break. I simply exit at the trend line break. This is the management, the price section. If the trend line, just imagine that the trend line was broken here, I would exit here with some small profits. Okay, this time I exited at my full take profit. So this is simple management rules. You are trailing your stop, you moving it lower and lower, because in case we may have that spikes to the upside and the trend line is not yet broken, and it simply spikes through and gets you out. Sometimes it is simply protection from this unexpected situations, but basically most often situation is that I exit at this trend line breakout. Okay, that is it about the trade management. So this section is done. Let us switch to another section. This section is called 30 minutes. It means that the smallest time frame, the minimum time frame for this section is 30 minutes. I am not allowed to trade that on 15 minutes because of spread, because of commission. It's simply not profitable for me. Okay, the pound Aussie 1 hour and 30 minutes, nothing. Euro GBP 1 hour and 30 minutes, nothing. Euro Aussie, here's the trading opportunity that just completed, and look at this. We already started a reversal. My reversal criteria is this. First of all, I draw the ATR net. The reversal bounce should be at least 1 ATR. You see this? This is the first criteria, the size of reversal. So we should bounce at least 3 ATR. And second criteria is that we need at least two green candles of opposite color. They should be reversal candle. One of them is actually called a reversal candle, and the second one is the follow through. So both of them should be more than 1 ATR. After this happens, I simply stretch my Fibonacci. Just imagine that this candle closed, this one closed, and I place my limit order at 50%. What happens most often is that after this initial thrust to the upside, we have price retracing back to 50 or to 618. 50 is the most common, and then I enter and get this portion of the move to 382 to 618. It depends on where the trend line break happens, but my take profit is 618. If it never breaks the trend line, it hits my take profit. Okay, so that is it. Initial thrust typically coincides with the B point, and then we have a retracement. And I also want you to pay attention to this price action. So we had this momentum slowing down. Here it was still bullish, small momentum, the candle is red. Then we had large momentum, you see this? Then we had small momentum, and now we have small momentum. What I want to see is momentum rising as we move higher, because you just should keep this in mind. I call the indicator steam. When we are going out of steam, we are about to reverse. You should keep in mind that we don't have volumes in Forex trading, because it is very difficult to calculate how many contracts were bought around the globe. We can calculate the futures, how many contracts were bought on this, on that exchange, maybe on New York exchange or somewhere else, but we cannot calculate how many contracts were bought all around the globe. And what we have instead, we have the tick volume, we have how many positions were opened. We can treat this as a volume indicator, because the more positions you have, more contracts you have opened typically as well. But it is not necessarily. Sometimes there are big guys that open one huge position that has enormous number of contracts, and the tick volume will say very small, but the price movement that follows is very big. What I suggest to use is this kind of momentum or steam indicator. Prices move because of demand or supply exceeding that. The more contracts you buy, the further price moves. If okay, we have this thing, we have momentum is rising. This is very good. If it continues higher, I just restretch, and for now I have this 50% retracement. Let me place it here, and 50% will be my entry. Okay, I will enter here. Okay, good. Let me continue. What I suggest you to use instead of volumes, I suggest you to use this kind of indicator that is called a steam indicator, or you just use your eyes to see if the next body of the candle is greater. So it is said that volume should support the movement. For example, if you have a downtrend while you have an impulse or a movement to the downside, your volume should increase, and when you have a correction to the upside, yes, your volume should decrease. So here's the same with body of the candle. It increases when you have movement to the downside, and of course you can see green histograms, and then it decreases when you have correction. The body decreases. it is not a movement to the upside. It is simply these guys that previously sold, they are simply covering their positions, they are simply taking their profits. Then when we go to the downside as well, the movement should increase again. It is very important, the transition from decreasing momentum to increasing. We've been moving to the upside, and our steam was going out. We were going out of steam, and then we had this volatility to the downside. After initial volatility, we of course have some pause. That's why we have these out of steam candles. But then we increase and increase like this. And look at this upside candle. It is not exceeding the previous candle. And we already know that we have a movement to the downside, that we have an impulse to the downside, and we had rising volatility to the downside, rising desire to sell rather than to buy. That's why when we have this correction, our volatility decreases like this. Of course, after that, somebody decided to buy it from here to here, and we have volatility increasing to the upside. Let me use this like this. It increases to the upside from here to here, and we had some upside movement, and then the market changes its sentiment, changes its decision, and we first start this from small volatility, and then we increase this volatility to the downside. And now what we have right now is this current situation. After this long candle to the downside, after this great power to the downside, we have smaller power, and now we have some power moving to the upside. Of course, this, if we use this horizontal line, although this power is less than the previous one, yes, it is much more than from here. You see, it is more than all the candles way long before this candle. So you can see this. So we have much more power if compared to all these candles in the middle before that. So it is still a powerful candle. So we still have that powerful movement. And what I'd like to see is the volatility increase to the upside. While we are moving to the upside, the volatility is increasing to the upside. Or we simply move it kind of sideways like this with decreasing volatility, and then we expand to the upside in this manner. So this is the only situation that I want it to be. I'm not expecting this price to reverse to the upside very sharp, because we have this increasing volatility, we have increasing power to the upside, to the downside, sorry, and decreasing power to the upside. You see, we are now still lower. Although we move to the upside, we're still lower. Okay, if this candle goes lower like this, yes, and the volatility increases like this, if the histogram becomes higher than the previous one, it means that correction may be over and the impulse leg starts. I would rather wait for a double bottom here, or maybe exceeding that double bottom slightly lower. So it all depends on the price section. So I highly recommend you guys to use this body analysis. Just simple analyze the bodies of the candle. So they should become smaller when we have correction, smaller and smaller and smaller, and they should tend to become larger and larger and larger when we have impulse. If you can create that steam indicator, it is very good. It is simply the difference between open and close, and plot it as this histogram. I have done this indicator in a matter of 5 seconds or so. It is one line of coding Very simple. Okay, I will also create this indicator for TradingView, and I will what I will do, I will give it for free. I'll give it for free. I already created the indicator that is called a trend bar indicator for TradingView. Just go to my profile on TradingView and hit that scripts. Instead of idea, there is a tab that's called scripts, and you can find it there. Okay, I'm looking at this price action closely to find the possibility for entry. Let's go next. These were the execution thoughts, how to execute. And as you see, the pattern is completed, and I'm still hesitating because of this movement. I'm still in doubt. When I have no doubt, then I will enter. But when in doubt, simply stay out. OC Yen, a potential unified Gartley is closer to completion, closer and closer. Let's go 1 hour, nothing. This one is already invalidated. Euro Canadian, 30 minute and 1 hour, have nothing. GBP Canadian, 1 hour and 30 minutes, we have nothing. NZD GBP, we have nothing. And Euro New Zealand, we have nothing. Oh guys, simply just go back to this euro dollar. I told you that we should have a correction to 50%. So as I just told you, the movement to the upside should have expanding. Let me draw it this way. Trendline properties and ray. I just disable ray. The movement to the upside, yes, it should be expanding, and if this 50% is a correction, then it should be going lower. Yes, agree? We should go higher when we move to the upside, and if we have a correction, then it should be lower. Exactly the same way. If we have it higher, then we don't have a correction, we potentially starting an impulse to the downside. Potentially. So you should keep in mind that bodies of the candle tend to decrease in corrections and increase in impulses. So if you have increasing bodies, most likely you are starting an impulse, wait for another leg to the downside, and only then execute it long. So as you see, we have this distance from completion of the pattern towards the invalidation of the pattern. So all this rectangle from here to here is the distance to buy it. Somewhere here you can execute it absolutely. Maybe it may have some more final leg to the downside. Okay, and now let me switch to my final 60-minute group. I only have 3 pairs in that. They are Canadian. The pattern was completed, and let's examine the execution. And that was a perfect execution example. So we have it this way: momentum losing its steam. Let me zoom it in more and more. Okay, I need to place this completion level. Okay, so as we complete the pattern, you see we have high momentum candle, and then we become smaller and smaller and smaller. You see the bodies become smaller, we are losing its steam. Then we have a large momentum, higher body, but this candle is what I call the indecision candle. You see, because it has very large spike to the upside as compared to the body, and after that we have expanding momentum to the upside. This one, we move higher and momentum expands to the upside. Then we have 2 green candle and the 2 red candles. Their momentum is lower. Again, then we have green candle and the momentum is higher. So every time we have a green candle, we expand momentum, we have large bodies, and every time we have red candles, our momentum decreases, it becomes smaller. Even here it also is slightly smaller. So when it is smaller, it is most likely then we have a correction. Okay, so according to my rules, I would wait after this thrust to the upside. I would wait to a correction to 50, and as I see that momentum is decreasing, it is okay, 50% executed. And what happens exactly after 50 to 618 is hit? We have this expansion to the upside. For now, this one is still running, I suppose. It hit 382. Some guys are closing positions at 382, but what I would prefer it this way. For example, I executed at that correction. So 1, 2, 3. Okay, 380 as is here. I'd make this position break even already, because the movement is pretty substantial. It is pretty good, and I will draw this trend line connecting this bottom, and now we have that bottom. Seems to me as we respect that. So the position is break even. If we break the trend line, simply exit with whatever profit. If we expand higher from here like this, close it at take profit at 618 or whatever. Okay, so this is the management for Canada yen. I'm not in this trade because I was sleeping while this happened. I simply explaining you the hindsight, or whatever it is called, the past price action. How would I do if I were in front of my screens? Okay, Aussie Canadian is nothing, Aussie New Zealand is nothing. Well, that's it for today. Hope you liked this video. If so, give me a thumbs up, share this video on social media, comment below if you are interested in some ideas that I explained here and you want more videos to be recorded explaining it in more details. And until then, good luck and good trading. Hope to see you soon.